Hash Rate is sponsored by Ledger. With the announcement of Ledger Flex and Ledger Stacks, Ledger gives you the best security on the planet for your crypto and identity. Ledger Flex and Stacks drive an e-ink screen with the same secure chip that's in your credit card and passport, except instead of protecting the secrets of banks and governments, Ledger protects your secrets and your private keys. Ledger supports Bitcoin, Ethereum, Solana, and more than 200 other tokens. The secure touchscreen, plus the Ledger Live app, means that whether you're buying your very first Bitcoin or doing your 2000th swap, you can do it securely and easily with your Ledger. And as always, use my link, shop.ledger.com/hashrate in the show notes to get the very best price whenever you buy a Ledger Flex or Stacks. And BAMP.FI's NUSD. NUSD is the Bitcoin dollar. Now you can hold dollars directly in your Bitcoin wallet on the Bitcoin chain. Swap between native Bitcoin and NUSD using just a Bitcoin wallet. No bridges, wrap coins, or centralized exchanges required. On the BAMP.FI website, you can swap NUSD with Tether and Athena's USDE, so there are easy ways in and out for you Ethereum people. NUSD is already supported by major Bitcoin DeFi protocols like .swap, and more added every day. Go to BAMP.FI to start your NUSD journey today. Hello, everybody, and welcome to Hash Rate. My name is Mark Jeffrey. My guests today are Danny Plainview and Chad Master of OpNet. Hello, gentlemen. How you doing?
Hello. How's it going, Mark?
Pretty good. Thanks for being here. So you two guys have been working on a project called OpNet, and the goal of OpNet is the holy grail of Bitcoin, or one of them, which is to add smart contract functionality to the God chain. Can it be done? And there are competing views on how to do it, right? There's a lot of projects out there trying to do it in one way or another. Some people are trying to, add virtual machine to Bitcoin proper directly through OpCat. That's sort of one thesis on how to do it. There's another thing called BitVM. There's Stacks, which is, let's build a layer 2 and push things to that. There's Merlin, right? There's a bunch of attempts at this, but I think you guys have a pretty unique approach. So why don't you give us sort of the down low on OpNet and in general how it works?
Yeah, so OpNet is a Bitcoin layer 1 meta protocol that is specifically made for smart contracts and smart contract interactions. The easiest way to think about it is imagine if the ordinal client had been made for smart contracts instead of just for NFTs. So there's no extra gas token required. Every smart contract is deployed directly on chain. Every interaction happens in a Bitcoin transaction using a Bitcoin wallet. And so you're playing on the L1 with Bitcoin directly and being able to build apps on it now directly. We subscribe to this thing called the Fat App Thesis, which is basically like adding applications to have the value instead of the layer of the protocol itself. So there's no gas token for OpNet. It's kind of intended to just have Bitcoin apps be able to be enabled on the L1.
Chad, you had something to say.
Yeah, sorry. You could functionally think of it like if the ORD client, which is built to do NFTs, right? The ORD client is built for NFTs. So ordinals themselves are made for NFTs. The whole concept is you're putting data, arbitrary data into Bitcoin blocks. That data is in a certain format, and it's tracked by this off-chain interpretation. This is the ordinal client, keeps track of
the indexers.
Exactly. The ordinal client itself is an indexer. So it's indexing a certain format of data that is intended to be used to upload metadata for JPEGs effectively to the Bitcoin blockchain and keep track of those. If that was made instead of being for metadata for JPEGs, but for smart contracts, basically. So you could put smart contracts into Bitcoin blocks by using a wider data set. And the off-chain indexer had more execution functionality, and that's effectively the basis of the OpNet design.
Yeah, so let me try to recapitulate some of that because we've spoken obviously before this, so I have somewhat of an idea of what you guys are doing. So the way I think about it is if you view the Bitcoin blockchain and the ability to write data to it you just view Bitcoin, the Bitcoin blockchain, as the world's most secure log file. And what you put into that world's most secure log file, instead of JPEGs and monkeys, you put code. And then that code is then interpreted by something exterior to the Bitcoin blockchain itself. And so you have like a virtual machine outside of it, which looks at that code, executes it, writes the results of that execution back to the Bitcoin blockchain, again, treating it as the world's most secure log file. Is that basically correct?
Yeah, the name BVM or BitVM or Bitcoin Virtual Machine has kind of been co-opted by a lot of these layer 2 type solutions, but this is truly the Bitcoin Virtual Machine in every way, shape, or form, right? It's a one-to-one recreation of the EVM, except built for Bitcoin to be able to execute these smart contracts that are deployed onto the Bitcoin layer 1 network. And, the key thing in the design for us is that every interaction that you make is just a Bitcoin transaction. So when you're deploying a contract, you're just making a Bitcoin transaction. When you're interacting with a contract, you're just making a Bitcoin transaction. Danny can kind of probably explain a little bit more as to what those interactions are. But the most important thing for us is that every single thing that you do is just a Bitcoin transaction, very similar to ordinals, in which, when you're making an ordinal, you're just making a Bitcoin transaction. When you're buying an ordinal, it's the same way. So we want us to be.
Well, there've also been like many other iterations of NFTs on Bitcoin dating back to like 2013. You had colored coins, XCP, and like the rare Pepes is kind of the main one. But because rare Pepes require you to also have the XCP token, there's another token attached to it. It doesn't feel like it's really on just Bitcoin layer 1. That's like the magic to us of ordinals. It's just Bitcoin. So why not just do that, but for an execution smart contract kind of machine as well?
So you have this thing that's exterior to Bitcoin that's basically running the code. What are those things? Are those validators? Are those what are those things, and how do we know that we can trust them, where the execution actually happens?
Yes, we call them indexers. They're basically just like nodes. Indexer kind of implies it's not its own blockchain, so we continue to use that term. And basically what they're responsible for doing is reading the Bitcoin blockchain, and they also read the pending mempool state as well. And then whenever a contract is deployed, they're responsible for indexing the logic of that bytecode. And then also the way that OpNet works is we attach a contract address to every deployed contract. So basically you have like this Bitcoin address that you treat as the point of call for that specific code. It's essentially like how sats are used in the ordinal client, where your NFT or your ordinal exists on a sat, even though it's just the ORD client like off-chain tying this sat to this specific piece of data. Yeah. So we do
this
the same
is an important
concept.
point, because we do know that this thesis works, because this is what BRC20s are based on, this is what ordinals are based on, and this is what runes are based on. And nobody's been able to cheat their way through that, right? Because there's billions of dollars worth of value you could get if you could cheat through it. So this method of sort of doing things is solid.
It's fascinating because again, we're talking about ordinals and BRC20s and all this stuff. It relies on all these little individual points of centralization, but because all of these indexers don't speak with each other. But it works because
basically, my ORD client, I could edit it to say that I have the first 1,000 ordinals, and then if you use my client, if you use my service says that I have the 1,000 ordinals, and that's the way it'll be. So like, there's no safety checks between ordinals clients or runes clients or even BRC20 clients as of now. Yeah.
Yeah, and that's what I mean by there's all these little points of centralization. But it works because Bitcoin is this ultimate time chain, and it's this ultimate truth layer. And so no matter what happens, the state of ordinals or state of BRC20s or the state of OpNet itself could be recreated. Even if there is no indexers, even if the indexer goes offline for 10 years, you can reboot it, re-index, and then the state can remain the same. So you have this ultimate level of truth that exists on the Bitcoin blockchain. And then within these layers of indexers, this is, again, kind of the I think the revolution really of ordinals and BRC20s is that it doesn't – what actually matters, what really matters is what happened on chain. Then you can index that from any point. and still get the same amount of truth. So you don't even really need one indexer to speak with another indexer inherently, because all of the truth is already on the chain.
Right. The source of truth is the Bitcoin blockchain. It is the world's most secure, unforgeable log file, and that log file serves as your source of truth. So that feels pretty good to me. I agree with that.
However, there are like many issues that come with the indexers not talking to each other. Like many a long time ago, BRC20 indexers were not on the same like rules. Basically, there was best in slot, there was Unisat, there was OPI. There's all these different ones.
Yeah.
And different indexers would say different things at certain points because there's just inherent problems that are going to come with, especially if you're basing a token standard on top of an NFT protocol like ordinals. You're basically introducing two layers of point of failure where your ordinal clients have to, they sure better be saying the same thing. And then also your BRC20 indexers have to be saying the same thing as well. So it's very, very difficult to like jam that together. And that's, a big part of the reason why it's called determinism. Like you want your token protocol, financial system to be deterministic, where you know for a fact that every indexer is going to say the same thing every single time. So it's very hard to do that with programmability if you don't have determinism. And so our indexers actually do talk to each other through a network that's called proof of authority, which basically is like every single block. The way that OpNet transactions work are also a little bit different. Like, for example, if I want to mint a BRC20, I want to mint a Rune token, right? Every single one of those transactions looks exactly the same in terms of the on-chain data. It's just a JSON file or it's a Rune mint. There's no like specific bytecode that is channeled by the previous block. It's just I want to mint this thing right now. On OpNet, we're working with smart contracts, and so you have call data in your transactions for like interacting with the smart contract, and that call data is bytecode that is dependent on the current state of that contract. So if like I want to mint a token and the token's at 99% minted and my last mint fails, it's going to fail every single time. Like there's no possible re-indexing that happens because my bytecode on chain just doesn't line up with what is available left to mint. So it's a lot more deterministic. To have like a programmable layer, you need determinism, and that is something that every single standard right now is lacking. That we're very excited to see what people do with.
Okay, let me get into some. Let's shift gears now and get into some shit, right? So there are certain voices among us who say that the next big wave in Bitcoin scalability is Fractal, which is this project coming, sort of funded, Unisat's behind it, theoretically funded by Binance, and it basically creates fractals of the original Bitcoin blockchain. So the same code mostly. There's a little bit of difference, but mostly the same code as the actual Bitcoin code, and it creates multiple, sort of layer twos of Bitcoin, and they have this thing called the elevator, which is the bridge, between the main Bitcoin God chain and all these sort of like junior Bitcoin chains in the Fractal universe. And there are several voices saying that OpCat, which theoretically should enable smart contracts on the Bitcoin God chain, it won't be activated on the Bitcoin God chain anytime soon, but Fractal will launch with OpCat enabled, which would mean, well, first of all, I know that you guys do work with Fractal. In other words, OpNet is compatible with Fractal because that is a actual Bitcoin chain, or legitimately. Won't the enabling of OpCat at Fractal's launch invalidate the need for OpNet?
No, most definitely not. So first off, Fractal seems very, very, very cool. We're very excited about Fractal. It uses this technology called merge mining, which is basically like, I believe the way that they work is every 3 blocks, one of their blocks are mined by Bitcoin miners as well. So you can like basically tap into the Bitcoin miners, and they can also earn rewards for earning the Fractal Bitcoin token. So that's very cool.
Which, by the way, that's not a new concept. This is something that Satoshi Nakamoto suggested a long time ago. Namecoin has implemented it.
2013, it's a long time ago. Yeah.
There's a bunch of different people who have implemented this merge mining concept. So this isn't a new thing, but it's an interesting development for something as mainstream as Unisat to implement with their layer 2.
Yeah, big time. And the enabling of OpCat comes with the fact that they're a strict fork of Bitcoin in its current form. So it's not like a BSV or a Bitcoin Cash where they're forking everybody's balances over, but the actual code base is still based on the current active version of Bitcoin, which includes Taproot, and I believe they're the first like real Bitcoin fork to include Taproot into it, which makes things a lot easier for us and for ordinals and runes. Everything is based on TapScript, so it's a lot easier. And then in terms of OpCat is an interesting bit and idea.
Tell people what OpCat is for those who don't know.
Well, yeah, OpCat is basically an opcode that Satoshi Nakamoto turned off in, I believe, 2011, 2010, sometime around there. And it basically, if you have 4 different values, 1, 2, 3, 4, the way that you have to store those right now are like as 4 separate values in your opcode. Because Bitcoin does have a programming language called script. It's not Turing complete, but you can do basic things with it, like HTLCs, PSBTs, all that kind of stuff, even TapScript. And so OpCat would basically it enables the merging of values. So instead of 1, 2, 3, 4, you would have one value that is 1, 2, 3, 4. And because of that, technically it allows for Turing complete actions to happen. The issues with like complex actions.
So CAT stands for concatenate, right?
Yes.
So which means to combine and add things together. Okay, go ahead. Sorry to interrupt.
Yeah, and it's very cool, and it does enable some pretty cool things. Kind of at the center of this conversation, to my knowledge, is the concept of like wrapping Bitcoin, where you can create like modular what basically is like an HTLC right now. It's called a covenant. So you can wrap Bitcoin into a covenant and then unwrap it at a further date. And it's not completely trustless as I understand it, but it is better than the current, like federated network that most people use. So that's
why did
cool.
Satoshi turn it off? Like, why was he scared of it?
He turned it off because it's unknown no one had really used the OpCat opcode to like do anything at that point. And he saw that you could possibly like commit, I believe it's like an overflow attack where you like basically store too much value in one thing, and then it causes everything.
So
to crash.
OpCat could be dangerous. That's why he turned
it could
it off.
be.
He wasn't sure.
It could be, but the implementation of Taproot limited that risk to, I believe it's 512 bytes is like the maximum amount of data. So it's not really a risk because of a separate upgrade to Bitcoin that was done way after Satoshi.
Okay.
But we still just don't know, So
there could be other bombs in there. We don't know. Yeah.
Yeah. But implementing it on a merge chain first is totally the way to go. Like we're that to see OpCat in action without risking the possible things that happen, to see it on a merge chain first would be really cool.
Yeah. So basically the other fractal chains will have it enabled. Okay. So it does in fact. Sorry, go ahead.
A key difference though, and I think in some of the public understanding about it, is that it doesn't allow for, and this is sort of where, to answer your question about OpNet, it doesn't allow for smart contracts in the way that we're familiar with them to be enabled, right?
Okay.
It allows for extremely basic, some type of extremely basic levels of programmability, but it does not allow for anything that would be truly beneficial to anyone trying to build any applications or really do anything.
Like liquidity pools, right? That's
you
like a big.
Do that with OpCat. Okay.
No, you can't do that with OpCat because it's still constrained by the rules of UTXO things, right? Like UTXO is very limiting to work on when you're trying to build programmability because it's a very silly way. UTXO design was not, made with smart contracts in mind at all. So to do smart contracts and fit it into the rules of Bitcoin 100%, it is a little bit more possible with OpCat, but it's still not going to be the familiar environment that everybody has, which is like Solidity, which is something that's created from the ground up to be used for smart contracts. And Solidity,
yes. Yeah, so UTXO, for those who don't know, it is the way in which Bitcoin performs transactions. And I'm not going to get into the details of it, but it is fucking weird and wonky as hell. It just is. It works great. And there are good arguments for doing things that way, clearly. But it's very bad for working with smart contracts. In fact, it's impossible to create smart contracts around something which is based on UTXO. That's the short answer. So you can't do liquidity pools with OpCat, which is sort of the root of all DeFi, right? You need liquidity pools for Aave. You need liquidity pools for Uniswap, right? Without liquidity pools, you're sort of dead in the water, right? So,
Yeah.
okay.
That's the first block, Yeah.
And that's the real reason why it's not for us. It's not a concern for us as far as OpCat's implementation on either Bitcoin Layer 1 or whether it's on Fractal Bitcoin. It's not so much of a concern for us for what we're building. In fact, it only really benefits what we're trying to do because it allows for a better way to effectively wrap Bitcoin on Bitcoin. That's really the linchpin of OpCat's benefits, is that it allows for this ability to basically create a wrapping of Bitcoin on Bitcoin, so you can in a second layer, or like in a more programmable layer, like a meta protocol layer, similar like OpNet.
This is the point of CatVM. This is the point of CatVM. CatVM basically, but it's not without trust assumptions still. So like if you want to wrap Bitcoin with an OpCat covenant to use on CatVM, you still are placing trust somewhere in CatVM to, like, if I wrap one Bitcoin and then I send my wrap Bitcoin to you, Mark, you are going to need to unwrap that Bitcoin, right? Like you need to have access to unwrapping that. So it's still going to be processed through the CatVM network in some kind of way. So yeah, OpCat is better than anything that anyone else is doing currently. But I will say that we do have some pretty cool stuff that we've cooked up with wrapping Bitcoin as well. That's kind of like one of the bigger parts of OpNet is the fact that we want to do DeFi with native Bitcoin, right? Like we want to offer staking and liquidity pools and yield farming, all these types of things with Bitcoin itself while staying on Bitcoin. And so we do have a solution for wrap Bitcoin within our system as well. And again, no solution right now to like wrapping Bitcoin or unwrapping it is fully without trust assumptions. Like there's going to be some level. But one of the things that you can really improve on is the speed that it takes to wrap in or out of this wrap network. So like, for example, Liquid Network or Stacks, it takes it takes 24 hours or longer to wrap your Bitcoin or unwrap it to get into these like L2s or rollups, right? And that's because they use this thing called a federated network for their multi-sig. So essentially they have like a bunch of signers, and those signers, whenever there's a transfer in or a transfer out, they have to sign off. 60, 70% of the network must sign off on those requests.
Is that programmatic or is that like hand cranked?
I mean, I'm sure there's some level of automation to it, but it's not without its flaws. Like it can take a while. There's a reason why there's a 24-hour waiting period for these transfers.
Well, I mean, because the bridges are the root of all evil, right? As we have seen on multiple occasions, right? The Ronin hack. There's been hundreds of millions, if not billions, hacked out of bridges. And for those who don't know, basically what happens when you bridge, you don't really bridge because things can't really jump from one chain to another. What you do is you take the assets and on chain A, you lock them into a smart contract here. And then over on chain B, they mint the corresponding assets over here. So nothing really moved. It just sort of got cryogenically frozen here. And now there's a token which represents those tokens over here. But if this smart contract gets hacked and gets drained, then all the assets that are over here suddenly have no backing. This happened to Phantom, right? So their multi-chain bridge, that was a catastrophic event for Phantom, like 2 years ago now. So it's sort of in the rearview mirror. Ronin, same thing happened. It's happened multiple times. So the bridging is terrifying. So in your universe, I'm on the Bitcoin chain, and I have to wrap my Bitcoin and push it into the OpNet side of the universe. So you effectively have a bridge also. Why is your bridge not terrifying in a similar manner?
Well, yeah, any bridge, like you just said, any bridge is going to have the risk of being a multi-sig, whether it's a smart contract or it's a vault of sorts. Any kind of bridge is going to have somebody else who's holding not your keys, not your money. But in the case of OpNet, we kind of there already is a standard for wrapping Bitcoin to get yield on Bitcoin. For example, like Wrap Bitcoin by BitGo has between $10 and $12 billion of Bitcoin that is existing as an ERC20 version, basically. And they have a council of signers who are known within the industry. They've never experienced a hack, and everything goes really, really safely for them. They also have
1% of all Bitcoin is wrapped right now. So that's a big amount, and that's stayed that way for years. So and has never been hacked. You're absolutely right. So go ahead. I apologize.
Yeah, and well, like in the current like environment, if you want to get yield on your Bitcoin, you either wrap it with BitGo to go to the smart contract chains, or you put it in a centralized custodian platform. And then we all know how that goes. That's what happened to Celsius. That's what happened to FTX. So people are kind of, I think, looking more for like these on-chain solutions and willing to do the wrapping still. So on OpNet, what we did. We have a fantastic development team. A guy named Anakin is our lead dev, and
Anakin, as in like Anakin Skywalker.
He's the chosen one.
we know how that turned out. So Anakin is in charge. Darth Vader's in charge of your bridge. That scares me a little bit, but anyway, please continue.
He's a good guy. He's cool.
I'm sure he's a good guy.
Yeah, but he basically looked through. He was like a Mev guy previous to this. And so looking into Bitcoin, he just went basically straight into where's the documentation and was trying to look at smart contracts on Bitcoin, like what is available to the current game. He looked at OpCat, looked at TapScript, all these things. And TapScript, surprisingly, is majority the majority of it is undocumented. Most of the stuff that's documented for TapScript is relating to Lightning Network, because that's kind of what the Bitcoin people who were working on it wanted to use it for. So there's a lot of stuff that TapScript can do that just doesn't really have any resources for like developers to explore with. That's why Ordinals kind of took so long. In my opinion, that's why Ordinals took so long to happen after the Taproot upgrade, is because just no one knew you could do this stuff. So once Casey figured it out by looking at the code, then he did what he found. So what our developer found is basically a way to combine a SegWit multisig through, you basically create a multisig through TapScript. So when you want to wrap Bitcoin into OpNet so you can get yield on your Bitcoin and use it for all these different games, we have two layers of indexers. Layer one is just like the Ord client, basically. So everybody, there's no incentive for running it. If you're a developer, you want to make a service, you're probably going to want your own API so you can run your own indexer.
It's a read-only state machine.
Yeah. Yeah, so it's not like an EVM node or something like this where there's a 51% attack. It's just an individual endpoint, and you spit out your result every block, and you just check it against everyone else. And then the second level of our indexers is called a trusted indexer network, and they also use proof of authority, but they use proof of authority that is like directly enabled through TapScript. So let's say we have 10 to 20. We'll just use 10 as a good example number. 10 different trusted indexers, and when you want to wrap your Bitcoin into OpNet, you on-chain create a multisig through TapScript between these different
on-chain on the Bitcoin chain, to be clear.
On the Bitcoin chain using the available, like this is technically a Bitcoin smart contract. This is just the very basic type of stuff you're able to do.
The very primitive one, yes, which is possible to do today. Yeah.
Yes. And so you create through TapScript this multisig between these 10 trusted indexers. And trusted indexers are like, it's essentially like how BitGo works, where they're trusted people in the space, exchanges, marketplaces, VCs, things like this. And so they're doxed, publicly known individuals. It's not like an anonymous network of this. So when you wrap it, it creates that point, and you send your Bitcoin there, and you're issued, one wrap Bitcoin if you have one Bitcoin going in. And then you can send that around, and you can end up, swapping on MotoSwap or whatever. You can end up with 0.25 wrap Bitcoin. And let's say you want to unwrap. Well, you make an unwrap request also on chain. And as long as those nodes are connected to the internet, as long as they're online, your unwrap request, you essentially have to put your wrap Bitcoin into a unwrap state. That's transaction one. And then transaction two is processing the actual unwrap, which is just a PSBT between the different trusted indexers and you. So, yeah.
And
so
they automatically sign. So a key function of this is that all a trusted indexer needs to do is have uptime, because using TapScript, there's basically validity checks that are baked in to prevent invalid requests from being processed. So there is no manual signing. It's simply, if it's valid, it gets processed. If it's invalid, it doesn't get processed. And so it's the element of trust is in the trusted indexer network, not so much in the wrapping or unwrapping, because again,
the selection of indexer is important. Everything else is sort of, it just automatically happens. There's nothing to be hacked. So that's basically what you're saying. It's less complex than what you would see on Ethereum. Quite a bit less complex.
Exactly. Yeah. And importantly, too, again, it can be a little bit complicated because of just terminology. But on OpNet is not its own blockchain or its own network or anything like that. When you get issued a wrapped Bitcoin, OP20, which is the token standard for OpNet, you're still on Bitcoin layer 1. You never leave. You're just basically turning your Bitcoin into programmable Bitcoin within the Bitcoin ecosystem.
Yeah.
So that is sort of, you're wrapping Bitcoin on Bitcoin in a native fashion, which is sort of the first of its kind to do something like this. Because again, importantly, you can't use normal Bitcoin in a programmable way. You can't use normal Bitcoin in liquidity pools. You can't use normal Bitcoin to stake.
Right. That's why you have to wrap it. Just for people who don't know, because it's like this was confusing to me at first, way back when. You're like, why the fuck am I wrapping Ethereum on Ethereum? Like isn't that like a mini Starbucks inside of a Starbucks? Like it just seems dumb, right? But the reason why is because the native gas token, or in this case, native Bitcoin, which uses UTXO-based transactions, cannot be referenced or manipulated by a smart contract. So you have to, transmute it into a form that is smart contract accessible. That's why we're wrapping Bitcoin on Bitcoin. Sounds dumb, but it's not. It serves a purpose.
Exactly. So now you have Bitcoin that you can stake, Bitcoin that you can LP, Bitcoin that you can swap with. You can literally it's the same thing as WETH, but on Bitcoin.
Right. Also, importantly, in contrast to other types of like bridging or wrapping solutions, there's not one single point of ownership for each multi-sig. So, for example, when I'm bridging onto a layer 2 like Stacks or something like that, I'm sending my Bitcoin to the single bridge point.
One address, just one address.
Right.
Yeah.
Which
one
is
smart contract address.
Right. Which is owned by Stacks, and it has signers on this multi-sig that's owned by Stacks. Different with OpNet is that every time someone wraps Bitcoin, they're creating a new multi-sig that is owned by the entire trusted indexer network. So there's not one single point of ownership, and there's also not one single point of wrapping, right? Every single time you wrap Bitcoin, you're creating a new address that it wraps to.
Oh, interesting. Okay, so it's basically like every time I wrap Bitcoin, it's like a completely new security system is set up just for me. So you might be able to, so even if somebody did break in, they would just break into my little security box, but the rest of the bank would be completely intact, right? That's basically what you're saying? Yeah, okay. So, and the other sort of big point here is that in the Stacks network, it takes 24 hours to get your Bitcoin in and out. In OpNet universe, it's like 20 minutes, kind of depending on what's going on with the chain, but roughly 20
blocks,
minutes. Yeah, in and out.
Right. Well,
right.
Yeah.
Wraps can happen in the same block as OpNet transaction. So let's just say I want to make a swap, or I want to do something. Let's just say I want to stake my Bitcoin, or I want to take out a loan against it or something. I can make that transaction and wrap it all in the same block. It's the unwrap that takes 2 blocks, just because you basically effectively have to. This might be familiar to people who use like BRC20s and stuff, but you effectively have to create your transfer inscription, sort of. That's like sort of.
Well, it's to prevent a reorg. It's to prevent a reorg, because if a block reorg happens and then you're in that block, then you
basically have a couple steps. I mean, but you have a couple steps on Ethereum too, right? You have to like approve and then actually do it, right? So it's not really that different.
Like that. It's exactly like that. Yeah. But basically, if you approve it to be able to be unwrapped, and then you can unwrap. And again, there will always only ever be as much wrapped Bitcoin in existence as there is Bitcoin that is wrapped. There's not going to be a conflicting amount. It's always 1-to-1. So if you have 10 wrapped Bitcoin and you want to unwrap that 10 wrapped Bitcoin, you will always be able to do so, because if there's only 10 wrapped Bitcoin in the system and you have all of it, you'll be able to unwrap all of it. If there's 100,
it's not like a synthetic version. It's not like a synthetic version of Bitcoin. It's directly backed 1-to-1. Also, a key part of the trusted indexer network is there is a small fee on wrapping your Bitcoin in that goes to the trusted indexers. So it's a 0.3% fee in our design right now that goes and gets split between the trusted indexers. And basically, the nice thing about wrapping is it's volume based. So like if people are wrapping in and then wrapping out, you can it's not like only 21 million Bitcoin can ever enter in it's only at one time they can enter in, but you can have two sides of that.
Yeah. So you guys have no gas token, right? No. So there are no team tokens because there are no tokens, and you're not collecting this fee. So why are you guys doing this? Why and how do you make money? Right.
Well, it started with MotoSwap. Like that's kind of our year-long journey so far in the ordinal space, even longer. Has been finding what's the real way to do Uniswap on Bitcoin, because anything else is going to be making compromises that are going to limit the amount of people who want to come over and play. So,
and by that you mean doing Uniswap on Bitcoin. That's the goal. Right.
That's the starting. Yeah. Basically BRC20 tokens were they were a great experiment, and everybody who entered into that early, I mean, myself included, it kind of expected BRC20 to eventually turn into the stuff that we're familiar with on other chains. And it just never did, based on the technical limitations of it. And so we, just been looking for where to build MotoSwap. So we initially wanted to build it on BRC20, saw that wasn't possible. So we made our own version of BRC20. That was what CBRC20 is. And CBRC20 basically allowed us to it was like a playground for us to really push the BRC20 stack to its limits. And so our conclusion with that was we should put the smart contract logic on the side of the indexer. Basically, you can think about BRC20s as though Ordi was one smart contract, right? It was a smart contract that allowed you to deploy a token, to mint a token, and to transfer a token. And every single BRC20 token is a fork of that smart contract logic that just exists on the BRC20 indexer. So if you add more if you add more smart contracts to your indexer, then you can do more things. So we built MotoSwap on CBRC20 and mimicked the Uniswap logic, X times Y equals K, the constant product formula, all these things. We mimicked it as much as we could on the side of the indexer. But upon completing that, we went to ETH Denver and we showed it off, and everybody was like, oh my God, you can do a DEX on L1. That's crazy. But their immediate question is okay, how do I do a stablecoin? Okay, how do I do a lending protocol? Okay, how do I do a tax token? How do I do as soon as you can start building, you want to start building more and more things. And the kind of problem with ordinals and BRC20s and runes and all these games on Bitcoin so far is there's a cap there's a ceiling to what you can actually do and build with these things. So as soon as they start getting cool, it's all of a sudden you're stunted by the fact that you can't do what you specifically want to do. It's got to be the stuff that everybody agrees upon that this is what we can do.
Right. Just to pause, the reason why, and Danny alluded to this limitation with BRC20s, and this is still not something that is super widely understood, but the commands that you're able to do for BRC20s, and this goes pretty much a blanket for anything that's built using the ordinal client as its base, is that all of the commands that you're allowed to do have to be built into the indexer side, because functionally it looks like this. You have your Bitcoin blockchain, where then you have your ordinal client, which is the first indexer. And then this is just made for NFTs. So if you want to do anything else, like a token standard, for example, you have to make another indexer, which is a third layer. And this indexer is reading the ordinal client, which is reading the Bitcoin blockchain. Okay, so this is just the ELI5. You want to make a token standard. So this is what BRC20 is. 5 lines of JSON. It's a certain syntax. It's 5 lines of code that have to be structured a certain way. And this is within the ordinal syntax, which looks like something else. But within the ordinal syntax, you have to create your BRC20 syntax. And so you create an ordinal inscription with the BRC20 syntax. So you put that onto the Bitcoin blockchain. The ordinal client picks it up. The BRC20 indexer is now reading the ordinal index for the BRC20 syntax. When it recognizes when it recognizes the BRC20 syntax, it indexes those tokens. So
you minted one Ordi token or whatever.
Right. So all of your commands, all of your functionality effectively for these tokens has to be built into this third layer indexer in order to be able to do anything. And so when BRC20 first came around, they had 3 functions, and this is what they still have, but it's deploy, mint, and transfer. So these are the 3 things you can do with BRC20. You can deploy a BRC20 token,
yes.
You can mint a BRC20 token, you can transfer them.
Got it.
So obviously that causes massive amounts of limitation for doing anything else, because if you wanted to, let's just say, have a swap function or add LP, create LP, any of these other functions, You can't do it exactly. And so this is why we had to make our own standard, which was called CBRC20, where we build the commands into the indexer.
Okay. So basically, so a lot of people are thinking, people who watch this show, they've seen me interview Lynn from DotSwap. And DotSwap would appear cosmetically to be Uniswap on Bitcoin. And I got to say, Lynn did an amazing job. It feels exactly like Uniswap. I'm in liquidity pools over there. But the dirty little secret is, and Lynn admits this, it's not like it's a secret, is that basically everything is centralized. So normally with Uniswap, if I want to lock my liquidity in Uniswap, Uniswap can't just go and take my liquidity because they have no access to the smart contract that controls my liquidity. Only I do, right? Because only I have the keys to get my stuff in and out. Whereas Lynn can just take my stuff, which he admits to, right? So
and he's a great guy. We met him in Nashville.
He's a great guy. He's awesome. Love him. But you guys are talking about creating a true Uniswap on Bitcoin using true smart contracts, which I would be able to supply liquidity to, and even you guys could not take that away from me, even if you wanted to.
Yeah, so this is based on because BRC20 and Runes are UTXO-based meta protocols. So that means the ownership of your tokens are decided upon by a piece of like actual Bitcoin, right? So if I make a transfer inscription and I send that to you, then or I send it to a receiving address, whatever address gets that JSON file, that ordinal, now is the owner of those tokens. So to make a liquidity pool, you can't have like a contract address or any kind of, non-owned address because it has to be a Bitcoin address. Like you have to send your BRC20 token from this Taproot address to this Taproot address, or a Runes token from here to there. So what DotSwap has done, I think DotSwap has done a good job because they haven't messed with anybody's liquidity. They've continued to work on the product. The UI does feel like super snappy. But another like more concerning example would be OrdiSwap. OrdiSwap was a platform that launched that was really, in theory, it was the same idea as DotSwap, except that their multisig was just one team of people, and then they wanted to upgrade the protocol, and they pulled all the liquidity off the platform. All the user liquidity was pulled. Yeah, and they didn't tell anybody. Yeah, they didn't tell anybody they were doing that.
Okay, so that's the problem.
So that's the problem. I mean, DotSwap, it does have the same risk as that, but they have better custodians. They're much more transparent about who's controlling that.
And I might mention too. This to me, I think obviously custody is important. But I think that the real issue with DotSwap, and this is not to talk down on them because they've done the best they can within the constraints of what they're trying to work within, is that because the LPs are custodied, you can't permissionlessly create LPs. So this is the real beauty of Uniswap, is not so much that they don't custody your LPs, which that is a huge part of it. But the most important thing about Uniswap is that I can deploy a token right now and then create a liquidity pool with it right now without asking for anybody's permission, which means that when I launch a token, I can immediately LP it and I can open trading. And then within the first 24 hours of me launching this token, it can go to a $50 million market cap if it's a great meme or whatever, right? And this creates this, and we've sort of lovingly referred to this as the on-chain sex, which is really what something like DotSwap is, because they have to approve because they're custodying the LPs, they have to approve the tokens that are allowed to be swapped on the platform.
You have to get listed, basically. Yeah,
exactly. Totally agree. Prior to Uniswap, for those who don't remember, you had to go to Binance or Kraken and beg them to list your token, which was like the long process, and usually you had to bribe them to do it. Not all of them, but most of them.
And this like feeds into the permissioned environment that Bitcoin is right now, which is super, super off-putting for any smart contract devs. Like, we want the reason why I won't use DotSwap is because like I can't build on top of DotSwap. I can't take my LP token and then build a staking protocol around that, or do liquidity mining or anything like that. It's always this, I need to ask permission to do the thing that I want to do, and we're just like sick and tired of that. So it started with MotoSwap and us trying to look for a place to build like a DEX, and what that has come to is like we need smart contracts. We need to build smart contracts because we want to bring the builders over.
Right, okay, another question. So let's talk about stablecoins for a second. So we all know NUSD. Obviously, I'm a fan. I know you guys are fans too. And the BAMP is behind it. We've also heard now of Hermetica and a couple other stablecoins. when you guys launch this thing, will you support stable coins out of the gate, and if so, which ones?
Oh yeah, absolutely. Yeah.
I might even say that the question itself is could be reframed, because whether we want to or not, anyone will be able to do anything. So this is sort of the environment that we're really trying to create, is that anybody can do now anything with Bitcoin. So if you want to create a stablecoin protocol, whether it's an existing stablecoin protocol that wants to port over, or whether you want to launch your own stablecoin protocol, there is nothing that we have as far as control of who does what when. So anybody can deploy a stablecoin. Anybody can launch any sort of application on Bitcoin Layer 1 now. So the short answer is absolutely yes. And the long answer is that I think that it would be the smartest thing for any stablecoin protocol to do, to port over to OpNet, because it would just be, I mean, you're really just utilizing a different tech stack on.
So they have to do the work to port their stablecoin over to your universe. Is that how it would work?
If you already have an existing rune, right? If you have an existing rune token, this goes for any rune or any BRC20, you would either have to take some of the supply and port it over, or deploy, using OpNet, because you're using a different token standard, and these tokens.
Sorry, the beauty of NUSD specifically is that they're multi-meta protocols. So they're a BRC25 ticker, and they're also a rune token. And so they've already kind of started this meta of, we're going to have multiple versions of NUSD, and we can just do whatever we want. So NUSD specifically would not have to make a bridge necessarily to move the existing NUSD that is on runes or on BRC20 onto OpNet. What they could do is just start issuing NUSD directly onto OpNet as an OP20 token, the same way they did as a rune token, the same way they did it as a BRC20 token. The NUSD is really the most simple model for a stablecoin on Bitcoin, where they're really just wrapping another stablecoin on Ethereum and trusting that dollar is going to be worth $1, and then you're getting
it's like wrapped USDE basically, or wrapped Athena.
Yeah, that's exactly what it is.
It is.
And so that's
exactly
it's a super easy and super simple model to have. But I mean, I'm a holder of BAMP, very involved in that community as well. And there is nothing you can do with a Rune stablecoin really right now, besides go on .swap and use these other kind of centralized platforms for getting exposure to swapping and stuff. The only thing I can do with a Rune token, with a Rune stablecoin, is list it for $1 and hope that somebody buys it for $1. So again,
you
this
have
all
a stable NFT basically.
Yeah, and in our eyes, it's this all really depends on a proper.
Well, I mean, it's
LP.
not totally true. You can redeem NUSD for Athena using the BAMP site.
Yes, so there is an arb to be made.
$1. Yeah.
Yes, I find it very silly.
Yeah.
It's very silly when anybody.
You definitely can get $1 back, is what I'm trying to say.
100%. It is 100%.
Before they launched that, you couldn't necessarily, but right now you can. So I think it's pretty fairly backed and redeemable. So
absolutely.
But you need to use the token and not, you don't want everybody to be redeeming it to get the $1 value.
Right.
Because
of course. It has to be useful. Yeah. And I agree with you. There is I think they've succeeded in creating the Apple computer, but they have not succeeded yet in creating the VisiCalc that drives sales of the Apple computer. And somebody else has to come along and build the VisiCalc, or they have to do it themselves. I'm not sure which, but that stage of the rocket hasn't happened yet.
Yeah. You need an application. You need a number of applications, in my opinion, for a stablecoin to really be useful, or to really fulfill the potential of a stablecoin on Bitcoin. You need a bunch of other types of applications that you can now use this stablecoin on. Because what's the point of having a stable value if you can't utilize that in a way that maximizes that?
Yeah, well, the thing everybody uses stablecoins for is to hedge, basically. Like they're either cashing out their crypto and holding it in a stable on-chain because they plan on continuing to be on-chain. So they're just hedging against their volatile tokens. Or they're using it for perp dexes and things like this, right? Like they're using it in off-chain things. I think
lending.
Or lending, same thing, I think that the difference in the evolution of Bitcoin stablecoins and the ETH stablecoins is the Ethereum stablecoins, like Tether was kind of the first one to really do the off-chain centralized exchange. That was where it grew its liquidity first, and then DeFi summer happened where people were using it on-chain. It's kind of the opposite right now, where there's a bunch of, there's Hermetica, there's NUSD, and then there's a bunch of them on the L2s and things like this as well. But I don't think that the winner the one that sexes will start to use. That when you see an NUSD and a Bitcoin pair on KuCoin or whatever, you won't see that happen until on chain there has been like a chosen stablecoin. And just in our opinion, it's like you need at the bare minimum liquidity pools that are accessible for everyone, because liquidity pools give price oracles, and price oracles can be used to keep the rate of $1 a dollar. That can be used for lending protocols. Like the real trifecta of a stablecoin fits in where you have a DEX where you can swap Bitcoin for the stablecoin. You have the stablecoin protocol itself, and then you have a lending protocol where you can take loans out on your Bitcoin in the form of the stablecoin, and then you can even buy more Bitcoin and put it in the lending protocol. Like you can lever yourself up on chain to do this. And NUSD, like in my opinion, they have $3.6 million in real Athena that's backing their stablecoin. There's no worry about it depegging. The worry for me is more like, what are people doing with it besides holding it to get it? The APY.
They're doing nothing with it at the moment.
Like 80%.
You're absolutely right. In the early days of Tether, and I was there, Gandalf, 3,000 years ago. I was there. So and Tether Tether. I knew it when Brock Pierce and those guys were running it. And it kind of wandered around the desert, purposeless, not a success for a long time. And then it got bought. And then basically people realized, oh, the purpose of Tether is so that I can go and buy it like on Coinbase. And then I can use that Tether. Now I have a stable coin that I can go and buy exotic coins on Binance with. Right. And other than that, before Tether, I used to have to set up a wire transfer with Binance. Right. So establish a bank account on that end. Send a wire in. It took like 4 days or whatever the fuck it took, right? And then same thing coming back the other direction. It was extremely painful. I did it, so I know. And Tether just made that super easy. So that was the killer. That was the killer app of Tether early on. And then, as you say, these perpetual dexes. So if you want to trade Bitcoin with 2x, 3x, whatever, 50x leverage, you construct those positions with a stable coin. You don't actually buy the asset. You use stable coins as collateral to create that position, which creates a shitload of demand for those stable coins. And you can only build perpetual dexes with a smart contract.
Well, exactly.
There's no other way to do it, right? So that's why you need. So it would seem to me that, NUSD's purpose in life is to be on a perpetual dex on OpNet. Right, like that. I mean, that feels like that's a good thesis to me.
I would think so as well. Yeah,
that or a lending protocol. Like those would be the two things.
Lending, well, lending's sort of the same thing.
The real thing that we've heard from in all of our talks and research that we've done is a huge demand for. I mean, we're talking about going away from your people who mess with runes and your degens who are messing around in the Bitcoin ecosystem, going towards people who are just hardcore Bitcoiners. Is the dilemma that they face, or Bitcoin miners, for example, the dilemma that they face is that if they ever want to realize any profits, they have to move their money off either to a centralized exchange or bridge to Ethereum and take advantage of like something like Tether.
They only have ERC20 tokens. Like the majority of Bitcoin whales use Tether, and they're willing to make the compromise of using an Ethereum-based stablecoin because it's the only option. Like they have to, even if they're Bitcoin people who faded the ICO and think ETH is a shitcoin chain. Like they're still going to use Tether because that's the only thing that's available to them. So these massive Bitcoin whales. Like not only is there demand for the on-chain use of a stablecoin for like degens and people who are trading these speculative tokens, but also if I'm a holder of a massive amount of Bitcoin and I'm going to cash out to a centralized exchange, if I had the option to cash out on an ETH-based version of Tether or a Bitcoin-based version of Tether, I would probably choose the Bitcoin-based version because they're both the same thing. It just depends on where they're issued on. So like the TVL of Bitcoin DeFi why is it not the same as the TVL of all the stable coins on Ethereum when it's mostly Bitcoin people using these tokens anyways?
Well, there hasn't been a token standard that's come out that utilizes smart contracts that allows for simple mint and burn functions that are like easy ways to issue these stable coins. You can only do it in this, again, NUSD and Hermetica, et cetera. Like every issuance is manual, right?
Well, here's even funnier about NUSDs. NUSD uses BRC25 ticker and also uses runes, right? And so because these are two different meta protocols, on BRC5 ticker tokens, you can deploy a token that only the deployer can mint. So there's only the exact amount of circulating NUSD that's backed by Ethena. That's the amount of circulating, like minted amount of NUSD, and they just mint more whenever they need to because that's the rules of BRC20. But on Runes, there's no rule that allows the deployer to only deploy a token. They just have basically the deployer can mint out their token supply, right? So they on BRC20, there's only like 200,000 or 300,000 NUSD in circulation that exist, with the possibility of there being like a trillion. But on Runes, there's like 14 quintillion NUSD that exist, that are minted and could be moved from a wallet and spent right away. Like all of those could be swapped, and they could drain the dot swap pool, right? Yeah. So that's
I brought that up on the episode I did with Jack, who's the guy behind BAMP. So, yeah.
I mean, obviously the chances of that happening are like very low. And again, we're holders of the BAMP token in the community, so this is not like fun. But that's just the reality of trying to make a DeFi product on Bitcoin is like a nightmare right now because there's not even consistent rules. There's no D in the DeFi. Yeah.
All right, so let me move us along a little bit. So, how close are you guys to launching? And is there any way you can demo? Do you have anything you can demo to us, or is that sort of too early?
Yeah, we have a testnet basically environment that we are testing with like a group of 100 people right now. Because again, we OpNet is made by the same people that have been making like MotoSwap, so it's the same internal teams there. There's no edge to MotoSwap within OpNet. Also, like there's no part of OpNet that gives MotoSwap some kind of fees go here and they can't go anywhere else. It's totally fair, yeah. And so we have quite a big community of MotoSwap people that are doing like hardcore testing for us right now. And then we wanted to launch the testnet this week, which is, I don't know when this will air, but it's August 5th right now. And then the market completely shit itself yesterday. So we were like, okay.
So you decided to pull back.
Yeah. So because at the end of the day.
So how are you guys? Are you guys recruiting developers right now? Like, how do you go to market with this? I guess
so there's a number of projects that are already building in the early stage before we've even gone public with the testnet. And so I would say there's around maybe 7 to 10 different projects that are building right now.
Cool. Can you give us a sense of what they are? Are they?
Yeah, there's people trying to make Pump.Fun basically, where you can launch like a token and then it gets LP to MotoSwap right away. So that's cool. There's people trying to build. There's a team called Stash that is building a fork of Liquidity, so you can issue a stable coin against like lending positions. Yeah.
Yep.
Right. So those are a few of the early builders, and the real beauty of OpNet is that, and we haven't really even gone over like the basic tech specs, but it uses your smart contracts are deployed in AssemblyScript, and so it allows.
So it's a WASM based VM. Yeah.
WASM. Yep.
Yeah, so it allows you to have a lot of creativity and expressibility in the type of applications you can develop on Bitcoin Layer 1. And what that allows for is, again, name your application on Ethereum that you want to basically port over to Bitcoin. And it doesn't have to be the teams that are running those projects. Again, like the Stash team is basically looking at liquidity and saying, okay, we can change this, and this to optimize it for Bitcoin or just to optimize it long term. And
there's been 8 years of smart contract DeFi products to learn from on Ethereum and all of the other chains, right? So it's like very exciting. We say like ETH was a testnet all the time because the real a DeFi market only has a bull run when there's influx of capital coming in that like allows for the yield to stay high, right? That's kind of like the basic Ponzi of DeFi. And so like, the market is pumped 4x, even with the big dump, it's still pumped almost 4x from the bottom of 2022 when FTX collapsed. Yet DeFi is nowhere near the top when it even was last cycle. And that's kind of because like on these ETH smart contracts, there was so much influx of capital last cycle because it was kind of the first time anyone, yield farms existed. You see everybody had the crazy APY, everything was nuts. And then when that fell apart, it's been very hard to like revamp the excitement and offer that kind of yield again because there's already $100+ billion in TVL. So for it to be like a insurmountable amount, it would have to be like $1 trillion, dollars entering into the system for it to revamp like that. But on Bitcoin, there's virtually $0 of L1 TVL in terms of DeFi on actual Bitcoin. There's no TVL in BRC20. You can kind of consider NUSD to be TVL, but not really because it's just like an exposure to an ETH stablecoin. So when your TVL is 0, it can only go up from here. And we're talking about Bitcoin, which is the mother chain. Is $1.3 trillion of money that can just unlock into DeFi now. And then you also have a lot of people who are DeFi people are not like maxis about any chain that they're on. They're money people, whether they're developers or they're players or they're liquidity providers. They're going to follow the money. They're not like loyal to Ethereum. They're all spread out in these L2s and Solana and everything. So the type of players that would come into a DeFi environment on Bitcoin, they haven't really had the opportunity. It's really just been like pure degenerate games on Bitcoin so far. It's been shitcoins and JPEGs, and that's pretty much it. That's the only thing that's like reached any kind of adoption of Bitcoin. So, if you're an EVM DeFi dev, you look at ordinals, you're like, I can't, there's nothing for me here. So I have no interest in this. Versus if you have the opportunity to like, hey, do you want to fork Aave, which is a tried and true protocol, and put it on Bitcoin and be the first ever Aave on Bitcoin? And obviously there's going to be hundreds of millions of dollars probably flow into that pretty quickly. Like that, right. That's the offer that having a programmable, familiar environment. Also, the thing about WebAssembly and AssemblyScript is that it's very, very, it's like a pretty modular language support. So right now we use AssemblyScript, which is like a TypeScript variant of WebAssembly. We also have support for Rust. I mean, you can build like support for C++, all these different types of contracting languages. And there are even cross compilers for EVM Solidity contracts because Solana is a WebAssembly-based VM. They use Rust mainly. So you can put like Solana contracts on this. You can port Solidity contracts into WebAssembly or Rust and put them on this as well. It's very, very, very easy process. It took our developer one single day to port Uniswap v2 into a WebAssembly or AssemblyScript based version from Solidity. So right. It's not
the overall ethos from us as far as building this is that the dev experience is horrible on Bitcoin. In fact, it doesn't even exist, and there isn't really a dev experience, and so no one can build anything, and that's why there are no real developers in this space. And the dev experience will lead to the user experience because there's also really bad user experience, even as far as something so simple as trading shitcoins. Shitcoins don't trade like shitcoins trade on any other blockchain on Bitcoin right now. And that needs to change. That's the number one thing that needs to change if we're going to see any resurgence of interest in doing stuff on Bitcoin. And that's really what it is, right? It's make it easy for people to deploy smart contracts onto Bitcoin layer 1 and build applications. The applications, if it's easy to build applications, then it'll be easy to make good user experiences. Once there's good user experiences, then there can be a really large inflow of capital. And that's sort of what, and Danny sort of brought this up earlier, the fat app thesis, right? This is sort of where we make money off this, is that we have one application that we're making, and the game for
MotoSwap.
Which is our DEX, MotoSwap, which there's a token for. It's a revenue sharing token for the swap, but anyone can deploy anything. So it's a completely permissionless environment for this type of stuff, which basically means that our job is to build a killer app. And if we don't build a great application, someone else can come in and build a DEX that might be better than ours. And that's our risk, and that's our gamble, and really our goal. And not to sound so philosophical about this, but we've wanted to see DeFi on Bitcoin since ordinals came around. And it's been we've basically not slept and not rested until we came up with a solution that allows for this environment to be created. And if we lose the game in terms of DEXs and we lose dominance in terms of our application isn't as great as a different application, that is what needs to, that's the environment that needs to exist, because there needs to be able to be the ability for people to deploy 10 different lending protocols, so then you can get YFI. And then there needs to be 10 different stablecoins so you can have a curve pool. So there needs to be a bunch of different competition, and it needs to be a totally free and permissionless environment for anyone to do anything. And that does provide risk for our application. It also limits the amount of money.
Crypto. That's
crypto. All right, let me stop you guys here because we're a little over the hour mark. I have two questions. Let's see if you can answer them quickly for me. First question: to use OpNet, do I need a special wallet? I think the answer is yes, but please clarify.
No, so to use OpNet, you don't need a special wallet. You can use Xverse, you can use Unisat wallet.
Okay.
Leather is a little bit. I just am not familiar with Leather personally, but I believe it works too.
Any Taproot address.
Any Taproot wallet works.
Okay. Will I see my OpNet tokens in that wallet?
That's the difference. Is we would need support from the wallet providers to add because everything is permissioned still. Those are one of the things that we need to ask permission for. Is can you please add us to your wallets?
But we have our own wallet.
So right now you can't really use a Uniswap wallet on OpNet because I can't see my tokens.
You can see your tokens within a dApp. So it's kind of like if you want to connect your wallet to MotoSwap, you can see all of your tokens there.
I understand.
Or you can
the wallet wouldn't show my tokens, but when I went into the dApp, the totals would all be correct. So
it's like tap tokens or CBRC20 tokens right now. Like Uniswap wallet doesn't have tap.
Well, a lot of people don't know what those are. I didn't know what those were until like a couple days ago. So
there's a block explorer as well where you'll be able to see balances and stuff. So until all of the major wallet providers have asset support, you'll be able to see your balances, et cetera. But we also have our own wallet that does have all the asset support.
Okay, would I be able to use that wallet? Is that something I can download? Okay, so you would supply wallet. Okay, great. So the second question, I know that you're compatible with Fractal, but I'm trying to imagine like how this works. I understand in the main Bitcoin blockchain, you've basically created this scaffolding like around it, right? Which I think is the correct structure. Whatever the right answer is, whether it's you guys or somebody else, I think that's the right structure. What about all these Fractal sub-instances? You have to deploy OpNet on all of these Fractal sub-instances? How does that work?
Yeah, so basically it's like you can think about every blockchain as having these wrappers around them. So you can have ordinals on Bitcoin, you can have ordinals on Litecoin, you can have ordinals on Dogecoin. All these other versions of ordinals exist, but they're not the same exact ORD client. So again, this kind of talks about the off-chain aspect of this indexing meta protocol world where they're not directly connected in any way. So if we had OpNet on the main Bitcoin, we would also have OpNet on Fractal, OpNet on Dogecoin, OpNet on whatever, and they would be their own instances of OpNet.
But I'm saying that Fractal is like not just one chain; it's like a bunch of little Bitcoin chains. Does OpNet have to be deployed on each one of those copies?
I think that's not how I understand Fractal to be. I understand Fractal as I believe Fractal is just a merge mined version of Bitcoin. So they took the Bitcoin code base and then basically added their own like block times and things like this. And then every third block is just mined by Bitcoin miners.
So you see Fractal as a single chain called Fractal.
It is a single chain. Yeah,
it is.
Okay, so I thought it was like Fractal meant that there were multiple Fractal chains sort of spreading out, think like a bowling, alley pins to infinity to scale Bitcoin. I could be that was what was in my head. But okay, I guess maybe I was wrong.
That's not my understanding, but I will say because it is, to my knowledge, just a completely separate blockchain that's just merge mined by Bitcoin, sort of similar to how Rootstock or something works. Obviously, Rootstock is its own thing, but they're gonna employ as many marketing tactics as they possibly can to try and make it seem like it's not just a completely separate blockchain. But to my knowledge, it is.
So really, it's an L2.
It is an L2. Yeah, it is. I believe they describe it. Yeah. I believe they describe it as an L2. And just to say also, like, Unisat is the single biggest winner of anything out of this. Out of ordinals, out of BRC20s, out of runes, Unisat is the king of the fucking castle. And it's pretty much based on the fact that they were able to make JSON files feel like a token. Like massive respect to them for a year and a half later. Like they really did a good job at making it feel like it's this new thing. And again, that's all that really matters to the users is like so much so that you don't even need the devs, specifically in BRC20's case. All you really needed is like users to feel like this works. I do think a smart contract platform has to be a little bit more dev friendly, but they made it feel really nice. And I think they'll do a really good job with Fractal making it feel like, oh, this is a real Bitcoin L2. This is just like Bitcoin, but it's faster, Yeah.
All right, gentlemen, our time is up. Thank you for playing. Is there anything you want to plug? Any URLs, any Twitter handles before we go?
Yeah, follow OpNet BTC. That's the main OpNet account. The MotoSwap account is MotoSwap BTC.
OpNet.org.
Telegram. OpNet.org
OpNet.org has all of the information from the light paper to dev tools to getting started with the wallet, getting started building pretty much anything you want is on opnet.org. But yeah, and there's a bunch of different tools. Again, we obviously have OpScan, which is your block explorer. We have your wallet.
We also have like a dev suite of NPM pack. This is kind of our big. This is a little more technical, but we have a suite of NPM packages that mimic one-to-one the Ether's Web3 NPM package, which is how all smart contracts on all EVM chains connect to like MetaMask and stuff. So if you're an EVM dev and you want to make a dApp, it's almost a one-to-one type situation, and all of those standards are listed. Yeah.
Okay, everybody. My name is Mark Jeffrey. This has been Hash Rate. We'll see you all next time.